All right, we'll get it rolling. So I just wanted to look at what happened last week, give us an idea of what we can expect heading into next week as well. On this daily chart, really just all bullish, right? Same on the weekly, we kind of spoke of. Weekly was extremely bullish. We finally were able to get outside of that range that we've been stuck in really for, how long is that? A little over a month, honestly. So we were range bound. Monday actually opened below a previous week's low, and then from there, all one-sided pretty much. So we'll kind of see that on a lower time frame. As far as objectives, we wanted to first see this daily fair value gap. If we got above that, we said we'd continue for this one. We get above that. Ultimately, now I kind of want to see us all-time highs. For the time being, we're hitting this 4 hour, but the expectation would be this daily fair value gap should probably hold at least this daily fair value gap here and give us another run higher. So on the 4 hour, kind of pretty much the same thing. We did open with a gap to start out the week. Right, from where we closed to where we opened here. So we had this, we could kind of show it on, we'll show on the indicators later. But anyways, to start, this is our new week opening gap here. So as we said, heading into this week, we had created this low. We actually opened below that low. So we already grabbed liquidity to start out the week. After we do that, we then actually get back above the volume imbalance as well that was created. So at that point, we were expecting bullish delivery, especially because we were already range bound. Right, so as we speak about in consolidations, when we clear external ranges like this, we would expect a retracement to target opposing liquidity. So as soon as we get above that opening gap, we trade back into the volume imbalance, perfect delivery into the midpoint of that gap. You'll see on a lower time frame. And then we just accelerate. Admittedly, we weren't sure if we were going to escape this range. So our objective is really just this daily fair value gap. And we said if we can close above it, then we would expect the bullishness to continue. So you see that once we trade into it for the first time, we hold it perfectly. We then displace above it. And from there, that most recent fair value gap is what the expectation would be to hold. And it holds us nicely, especially because as we speak about, if we're going to create a wick like this, displace through the wick can become a gap as well. So now when we overlap those, you see that they're pretty much one and the same. And that ended up holding nicely and just continuing to deliver us. So we're currently above this daily as well. Right, so as we say, higher time frames still really bullish in my opinion. We've displaced above that. We left a 4 hour fair value gap. And then here on Friday, we've actually traded down into that. And we still have closed above this daily fair value gap, which is what I'd like to see continued buy side. So now we have a swing point here, just above our 4 hour. That would be my next area of interest. 1 hour, pretty much the same. We can see a little bit more of the inner workings. All right, so as we said, as we create this gap, we've already opened up under the liquidity. Monday gets back above the volume balance. A little bit of choppiness in here, but just picking up liquidity, still respecting the discounts. And then from there, that displacement we spoke of, leaving all of these as breakaway gaps. Getting above the daily, picking up these short-term lows. You notice that even though we are maintaining bullishness, price will kind of create these little areas of consolidation. Right, so as we spoke about, when we displace above the daily, just a little bit of consolidation so we have some liquidity to pick up before we continue. Right, so we clear that liquidity, returning into the fair value gap. And as we speak about, we like this because when we run out this short-term low, it's not able to close below. So when we wick like this and hold the range, that's pretty indicative of a liquidity run, and we can expect reversal. From here, it actually even gives another opportunity. Right, so say you weren't comfortable with waiting for this fair value gap tap. Well, once it does that, clears the liquidity, confirms it wants to hold, then breaks again, creating another fair value gap. And that's what eventually holds us. Right, from here, really all the discounts. So as we speak about, if we're going to break through a high with a fair value gap, that fair value gap becomes important. Look what we did here. Right, bullish break in structure, closing above, that's important. And we had that fair value gap. So after running up, price taps into that and then just continues to displace. And as we said on Friday, this is the 1 hour fair value gap. So on Friday, we trade up into the 4. We then retrace down into the 1 to pick up this sell side, and we displace away. So my expectation would be if we're going to trade back into this daily, I would like to see that hold. So I'd like this to be kind of the protected swing low for the time being until we run out this high. Right, that's this buy side here. You notice that that buy side and the 4-hour consequent encroachment pretty much one and the same. So I really like that. It's kind of an area for price to drop into. Now we'll probably just go straight down to the 1 minute, to be honest. Right, 15 minutes, pretty much similar to what we've been looking at on like the 1 hour. Right, so we had created this. Yeah, let's just go down to the 1 minute and see what we can get for each of these days here. So now that we understand the bigger picture, right, of opening below that weekly swing point and then all bullish delivery, we can kind of take a look at the 1 minute structure that took place. So as far as Monday, let's hide the indicators for now. This large area, as we said, was our new week opening gap. So that'll be important as the Monday opened up. But we had, I guess we can look at the whole day. We're going to keep the indicator up. So as we said, we opened up below that. And then from there, just immediate bullishness. So as soon as we open up below that liquidity, it's all buy side delivery. We do run up into this new week opening gap. This is all just kind of consolidation though, right? Slow grind. We really worry about the 930. So as we head into 930, we had created a little short-term low before that. 930 trades back down into that volume imbalance. We will hide the indicators. So we're hitting that volume imbalance high. We then get displacement away. In here, we're actually holding from the breaker. Right, so as we close above this area, we give a quick wick into it, and then really just the bullishness. Right, so from here, respecting all the discounts, fair value gap here holds. We displace away, trade back down into the down close candle, fair value gap holding, just continuing to push up. Ultimately, right, we do end up coming back down, kind of picking up all of the sell set that we had created. So here on lunch, we had already created a short-term high. As we spoke about, the expectation is really just continued buy side delivery. So this high becomes really the target for us. Right, so if that high is going to be the target, as we're retracing here heading into lunch, we pretty much just want to see if we can pick up all the sell side. And that's what we do. Right, we have relative equal lows in here. We had this short-term swing point. And then more importantly, this is our new week opening gaps midpoint. So as we give this huge sell-off, this is all just manipulation to pick up that liquidity, returning into the volume imbalance and hitting our new week opening gaps midpoint. From there, we get the displacement, closing back above new week opening gap. When we see that, we can then trust that the bullishness will resume. So we give a retracement just back into a discount. All right, we hold from here. We then close above that volume imbalance. Right, so as we see us close above the volume imbalance, and as we speak about, first time we do it, it's that wick. Very next candle pushes through that wick. That becomes our area of support, and it's paired with the volume imbalance as well. So price gets above that here, uses it as support, accelerates getting outside of now new week opening gap. Same idea, we have a wick here that gets traded through, right? Equal highs getting traded through with a fair value gap. That fair value gap is what we would expect to hold. So from there it holds, and then we actually get the nice release to finally target the buy side and right target all of these highs that we had left behind on the way down. So a nice run there. From there, just consolidation really to close out the day. We'll bring these back. And so close out Monday, we end up picking up that short-term low, running out the buy side, and pretty much just consolidating into power hour. We were able to reach up into like a new day opening gap here, but for the most part, not much expansion. As we spoke about, however, let's go to a 5 real quick. And this was kind of the characteristic of all week, is that we kept opening higher, right? So we would open, let's go where we at? Monday here. So we would open, and overnight we would actually run the buy side from the previous day. And that kind of happened really all week, right? Is that the previous day high was being ran before the opening bell. It actually happened. Yeah, it happened every single day this week. So I really bullish, not really giving an opportunity to run into the buy side, but that's still fine because there's still setups within this. Right, so as we look at that on the 5, we'll kind of just jump straight into where we were on Tuesday because we end up opening up here, straight, run through the buy side, slight consolidation, but as we say, just continuing to push higher. So now, as far as Tuesday's price action, we had created this consolidation. The underlying idea is we still want to see buy side. So we'll go back to 1 minute. For Tuesday, went with the idea that, okay, we want to see buy side. So the most recent swing high, that continues to be the target, right? And bullish delivery was simply looking for the most recent swing point, external range liquidity. So that becomes the objective. As we head into 9:30, I want to say we had news at 10 o'clock this day. And we had Powell talking as well. So it's going to be choppy. We already expected that, but you'll still see that really it still respected the setups. Right, so as we look at this original low, we wicked that low first at 8:30. We're consolidating heading into 9:30. As we said, we had 10 o'clock news, Powell was speaking, so a lot of 10 o'clock nonsense. The newest swing low becomes this low here. So in bullish delivery, the expectation is we want to see these short-term lows be pretty much engaged. We want to then wait for the reversal signature to print, and then we can trust that longs like that will support price. So originally, right, we did have like a first presented. That gives a nice little setup to start the morning. So right away, it already gives kind of a quick opportunity, right? Short-term low cleared. We displace above the bearish fair value gap, creating a first presented aligned with that. So that could be an opportunity already, stop below a low, just a target, like an ends model, right? Getting the high of that higher time frame inefficiency. This here is that daily, so I want to bring that back. So at this point, we were already consolidating within the daily fair value gap, which is why we expected that to continue for the time being, but you'll see how it becomes important later on. So ultimately, after creating this little swing point, we then make one more pass to pick up our sell side here. We run it quickly. We then actually aggressively run that most recent low. So it's just continuing to engage sell side. We run this low. We then aggressively reject back into the range. And from here, you can wait for first presented to be traded above as kind of the flip point, right? We can give that as our signal to start trusting longs. So at this point, it holds it. It accelerates into sell side here, picking up a short-term low. And now you want to wait for the first presented to be traded above. And for real confirmation, you can wait for this wick to be closed above. Right, so we close above the first presented here. Notice how we leave a volume imbalance aligned with that. We always like to see that if we're looking for areas like this to hold us. So we're creating new discounts aligned with the original time-based PD array. Right, so after clearing our short-term low, we trade through this high. That's our bullish break in structure. You can really confirm it with this candlestick here because it's the first one to close above, whereas this one's just a wick. This one closes above, and you'll actually notice as we close above for the first time, we left a fair value gap there as well. So now if our expectation is, right, we've already disrupted all of our sell side. We've been consolidating. We've cleared all of the original consolidations lows. So now we can start releasing for that buy side. And from here, just bullish delivery now. Right, so low hanging fruit entry would be the actual fair value gap. But in a day like this, when you understand it's going to be choppy, you can actually rely on that time base. So the first presented more than likely will be traded into, especially because we had that volume balance. That's what ends up being used. It holds there, right? If you were going to use something like this, our stop would be safe under the most recent swing low. So this low here, especially because it's in all of this balanced delivery already. Right, we come down, we go back up, we go back down, we make a final pass through that high. The paint roller analogy here, right? It's been efficiently delivered. So as we get above our first presented, these swing lows here will be protected. Ultimately, we hit that. And then from here, you could really target, right, anything, multiple targets. You could target the daily fair value gap. You could target the swing point. Obviously, external range will always be the best targets, right? So you could target all the way up here and just continue to manage it. But ultimately, you'll see as we hit that first presented, we get above the fair value or the midpoint of the daily fair value gap. And same idea. We're creating PD arrays that are linked with the higher time frame already. So as we create that 1 minute paired with the daily fair value gap's consequent encroachment, we come into it, finally closing above the daily fair value gap. And now at this point, we can expect that this whole daily fair value gap will act as support now because we've traded through the lower side of it. We've traded it and closed back above, and on a higher time frame, right, it's holding this with wicks. So from here, we just do get a little bit of consolidation. As we said, Powell was talking, so sloppy price action was expected, but the underlying bias still played out. Ultimately, we give a one more wick into daily fair value gap consequent encroachment. From there, that becomes our new protected low. All right, we would test that one more time, and then we finally are starting to leave it. So at this point, we want to watch pretty much the most recent highs. All right, so the highest high was here. You notice as we come into the daily fair value gap, we are finally able to close above that, leaving a volume imbalance. This was our, let's bring it back as well. Actually, we'll leave it there because we need that. But this, what was this, our 5? I just want to be sure we had the right fair value gap. 4 hour, I believe, 1 hour. 1 hour, okay. Cool. So that becomes important later, but for Tuesday, where we at? Get back. There we are. So this is where our 1 hour fair value gap was located. You notice that when we create it, as we said, we're breaking through a high. Look at the bodies there. All right, so once we close above that, we're trying to wick into the 1 minute fair value gap itself like this. Institutional order flow. But the actual bodies were refusing to get back below that. All right, so nice to see something like that, where bodies are holding, we wick into it, we push away again. You can really tell it's pretty fickle delivery, right? A lot of volume imbalances. So sloppy delivery as far as candlesticks, but still reaching for buy side pretty aggressively. Right, so as we retrace into the 1 hour from here, we can just continue to respect the discounts now. So we have a fair value gap that gets created, right? Every fair value gap held, displaced away, new fair value gap. Right, we trade down into it, it holds, we displace away. So from here, really all the discounts just continue to hold, right? Fair value gap here, we could do this all the way up. But you see now that when buy side becomes the objective, all of these discounts are an opportunity to enter, right? Fair value gap here holds, we displace away. Even this one gets used later. So ultimately we do reach buy side and give it a little bit higher run through it, creating some highs. We speak about how if the expectation is we want to remain bullish, after clearing buy side and especially closing above, right, like this, creating this little run that closes above indicates that we want to continue with this bullish delivery. But after clearing a swing point like this, we can expect retracements into the range, into the last untapped discount, and that one was here. Right, this was our last OB fair value gap that gets created that never gets traded into. So when we run this buy side, if we're still going to continue to run, price will at least retrace into, right, that open inefficiency, and that's what we see. The price ultimately hits it once, comes back down into it a few times. Ultimately, we get a quick little, right, run of these short-term lows. So even in here, this is how you can always confirm your entries. What's up, Mike? Yes, I am recording. Appreciate the reminder. Yeah, as we say, right, being able to confirm entries. So let's say that the expectation is, all right, we want to target this buy side. That becomes our area of interest, our target. We expect that this fair value gap wants to hold, but you don't feel comfortable entering right away like this. So what can we do? Right, well, instead, we can wait for price to trade into it and give us some type of buying setup, right, that we would trust. So originally, as we trade into this, we can't get its midpoint, and then we start moving away. Well, admittedly, you could already be trying to go long here like this off the inversion. And if that's something you did do, right, you'd be entered here, you would run through these highs, we would move our stop, we would retest it again. As we run this high, we would be running down equity, and more than likely you'd be stopped, either break even or slightly, right, with a slight stop as you start moving your stop loss. We're still not really thrown out though, so now it gives you another opportunity. All right, we trade back into it, this time fully hitting the low. So now this has been fully balanced when we close above, so we could just watch, right? We have equal lows. We then notice that these equal lows get cleared, short-term low being cleared. We displace, right? Large displacement above a candle, above a swing high. That becomes our break in structure. And then now in here, we don't really have any fair value gap or anything, right? But what you can use is either the breaker, so this up close candle, or you can use the inversion volume imbalances, right? So we create these volume imbalances on the way down. As we get above that, that becomes an inversion that should hold. And now, right, especially because you notice that the volume imbalance is nestled pretty much at mean threshold of the breaker, you could just use that. Price comes into it beautifully, trades into the low, closes above, uses the high, and then breaks away and reaches for the buy side there. Right, so once again, giving you a nice opportunity, even if you were waiting for the confirmation. From that point, as we say, running into buy side, we expect consolidation. So we just start consolidating, heading into the power hour. But once again, even power hour gives a little bit of a short opportunity. So within power hour, we create these relative equal highs. We push through, close above, as we often say. If that's the case, we would expect fair value gaps like this to hold price. Right, because it ran out some equal lows, it displaces through a high, closing above it and leaving a fair value gap. So as you watch this, right, and it becomes inverted, you can then trust that we should get a return just back into this range. And our attention was actually at these equal lows because it's just too clean. Right, equal lows inside of an inefficiency. So ultimately we close below. We do paint outside the lines a little bit, but even this could be another opportunity, right? Short-term high being cleared, this high is never violated. Then we get displacement again through a low, breaking below the low. Right, so now we have the bearish breaker, bearish fair value gap, and also kind of that 350 macro. As we talk about the first move at 350, we go up first, then break lower. So we can expect lower delivery that last 10 minutes because the first move is usually that Judas swing. So ultimately we do hold the fair value gap, hold the volume balance, and then we just trade into, as we say, this low to close out the day. So Tuesday, another bullish delivery. Then as we spoke about, right, heading into Wednesday, same idea. Previous day's high was already cleared. So that was really pretty much the move for all week, right? Is that we would create the previous day high. We would run out that previous day high heading into the 9:30 open. Once again, that's why we would expect a choppy, ugly delivery. Right, we've already hit previous day's high heading into Wednesday here on the 1 minute chart. So we just get consolidation. Now, this here was honestly really ugly, but it's still respecting like first presented. This is where you don't really want to put too much emphasis on kind of this type of price action, right? Because it gets ugly and whatnot. But even within here, we could still see what was taking place. Right, so originally we have all of these relative equal highs. We run out these highs, and then we create that displacement leg lower, leaving a first presented. If you wanted to use the first presented, right, how could we do that? Once again, waiting for confirmation. So if the expectation is that this low wants to be targeted, right, that's going to be our sell side target. And that would be expected because we've already cleared previous day's high, right? We've cleared a lot of buy side on the way up. And now at 9:30, we create a displacement leg lower. So you can wait for price to retrace into our first presented. You'll notice that it never closes above it. It closes on the high. It tries to open above it, but then it closes right back in. So that already is a bearish signature. Very next candle opens with a bullish volume imbalance. No wick to the upside and immediately slams lower and closes underneath the first presented and this fair value gap, or excuse me, this volume imbalance. So now that right there would be, right, the signal, the confirmation entry. Is that as we reprice into the high of it, we close below it, creating a hidden volume imbalance. That's us confirming that this fair value gap wants to hold. It's been balanced now, so we could just use the low of it, right? The low of it. And then you would be safe with the most recent high. But as far as like a safe stop, you just want to use the highest swing point. Right, so the original swing here that was created, that becomes our area of invalidation. And then you would simply just target the equal lows. All right, so even in kind of sloppy delivery overall, like if we zoom out, you can still see that there's ways to find areas to enter. And we actually give that a few tries. So we immediately reject, we trade lower, we bounce off the down close candle, we run up into it one more time, and then we finally break lower, running into sell side. From here, you'll notice that we actually create, once again, some relative equal lows. Consolidation, we make another attempt to get above the first presented. Right, as we see something like this, especially when it's held the first time, you would want to see another candle respect that and close above, and that would be a signal for bullish continuation. Instead, the same thing happens again. All right, we trade above it, we immediately snap back inside of it. Very next candle again, volume imbalance really was the exact same. Right, you can see we open with the volume imbalance. It doesn't go any higher, it moves lower. We open here, this candle doesn't trade any higher, immediately trades back below first presented. So from there, you can expect that it wants to reach, more than likely for sell side again. We first create a small inversion. So as far as entries here, right, you would really have to wait for an inversion. This one never trades back into. We then invert this. Right, so as we trade into it, respect it, then displace below it with its own bearish fair value gap. That is where we would expect price to then hold. Once again, right, wick being displaced through, so you could see the wick as the gap as well. So we're overlapping bearish premiums here, all in this one area. That's why price runs into that, and then ultimately gives another run lower, this time picking up the sell side and actually hitting the new day opening gap. From here, just continued consolidation. Right, the actual objective was it wanted to return into this 1 hour inefficiency. So you can see that that was kind of the whole reason for this move lower. We're going to put this real quick. Sell side. Okay. So now as we head into the afternoon, we had created this original low. As we say, we're just consolidating. Price is trying to reach back into this inefficiency. So it's trying to reach down into this before creating now our next bullish move higher. So as we watch, right, we can really wait for this move into the 1 hour. We dive into the 1 hour. Our attention would immediately now go to the most recent swing points created on the way down. Right, so we had this. I kind of look at this, honestly. Right, so this high here. Because if we look, that's the highest high, and all of these buy side, basically swing points, are nestled just below that. So although they're not perfect equal highs, that's the relative equal highs that will be targeted, right? That's the objective. This one actually becomes a purge and revert setup. So as we said, the objective was reaching down into the higher time frame inefficiency. We get that here. We're clearing low of day. So now we've picked up low of day. We've created a new low of day. We've held inside of a higher time frame inefficiency. You would want to watch the most recent bearish fair value gap. Because if we're going to create a fair value gap like this and close below, areas like this are where price should hold if it wants to remain bearish. So if we're going to invert that, you would then trust that as an inversion. Ultimately, you see we do push through that. It's really important to note that when we're pushing through this, right, we have all up close candles. So that's another way to kind of confirm good inversions, is that when we're looking at these, we want to see price really not spend much time inside that. So originally we do hesitate at midpoint. That's okay. But even then, you notice there's no down close candles. It's all bullish delivery. So we push through that aggressively, leaving a new fair value gap. And this is the one that we're watching because now it's paired with the original liquidity, right? Low of day. So we often speak of that right there is going to be a pretty strong entry point. The purge of the previous day's low, the displacement back above, you could use that as our area of entry. Right, so we have a fair value gap. We obviously have a lower one here, but I would really key up on that original low and use that as entry point. Move this here. So within this, you can kind of see how we're respecting that. Even this, though, is getting choppy, right? But we understand that we're consolidating at a key level, which is that old low. Ooh. You can see that this short-term low here, right? As we run through that low, we're closing underneath the inversion, or excuse me, the original bullish fair value gap. If we're going to close below it and then immediately trade above it, this swing low here would become our protected swing now, right? Because it's held the consolidation, it's cleared a short-term low, it's broken below previous day's low. So if it really wanted to remain bearish, it should have held. Instead, we immediately displace above that. So now this becomes our new protected low, and you could still just utilize the original sell side, right? So at this point, as we say, using that original sell side, trusting that this is our protected low here. And if you could have a low hanging barrier, new day opening gap, as we said, these buy side pulls here become pretty interesting, especially if the underlying objective is, right, the continued bullish delivery. This internal range, relative equal highs, become a nice area to target. So from there, another opportunity using, right, the original liquidity, purging and reverting, really is an inversion play as well. So a lot of PD arrays stacked up here. we get that consolidation, but ultimately we run higher heading into power hour. So we clear out that buy side, ultimately just retracing into now, right? We had another fair value gap here. I want to say that was our, get our barriers, 15, 5. Might have been a 1 hour again, actually. Got to label them off right. Let's see. Yeah, I believe that was like 1 hour. That is, yeah, okay. So it is the 1 hour. Same here, we'll label them right away so we don't forget. And that was our 4 hour. There we go, okay. So as I said, we created, there we go. So we come off of the original low, we create the 1 hour. We do paint outside the lines a little bit, as we said, just choppy delivery within here. You can really see it within the candles, but the overlying idea is still holding up. So on a 1 hour, even though 1 minute candlesticks are closing below, the 1 hour is all a wick. So it's still respecting this, right? We get one more run into that, quick run higher, not being able to actually run out high of day. And then we consolidate into the close. And then immediately as we open up the next day, we run right into previous day's high again. So as we said, that was the continued pattern of this week, is that we were creating that daily swing point heading into the close. And then as we opened the next day, before the opening bell at 9:30, we were already clearing that previous day's high. So once again, we had that. This one here actually ran a little bit more aggressively, however. Right, so as we were following this one, we actually delivered into a daily swing point here. So in London, we actually run all the way up, right, running out all this buy side that we had already created and clearing the daily high here. We then retrace back into the 1 hour again, right, back into an area of liquidity before giving us another leg higher. And at this point, this is our daily fair value gap, right, the large one that we were kind of wanting to see price trade up into. So at this point, we hit that, and then we run into, once again, just ugly consolidation. So pretty sloppy delivery most mornings, especially because we've already cleared previous day's high. Oh, sorry, black screen for me. Okay, we're back. That was weird. But anyways, right, as we've continued to say, when we're clearing previous day's high before the opening, we can kind of expect heading into the opening to be just ugly, choppy. And once again, right, we really got that pretty aggressively here. But within this, that's why we need to have our higher time frame areas of interest. So the 1 hour fair value gap nestled with the first presented, that became our area of interest. We see here at 8:30, right, we had created all of these relative equal highs, so that's going to become our target for later in the day. 8:30 runs lower first, picking up the sell side, perfectly delivering into the first presented, right? It's hitting the 1 hour consequent encroachment, but the low of that is the low of the first presented perfectly. So that's real nice to see. From there, we would want this to be our protected swing point. So we engineer some relative equal lows just above that, right? This is our rejection block now. So we create the rejection block coming off of the higher time frame area of interest, right? That we're always trying to do that. We're trying to anchor the lower time frame PD arrays to a higher time frame. Those would be the highest probability ones. So we see now heading into 9:30, once again, very, very ugly delivery here, but it still really plays out, right? So we had these relative equal lows. We run them originally, still holding this swing low. We give one more run of this low. Notice how, as we say, when we're clearing that low, it's simply a wick. So that's always nice to see. We're wicking into the rejection block midpoint. Candle bodies are holding this original wick low. So now as you start moving higher, right, you could trust that we should start attacking some type of buy side. Within here, nothing really to use as far as, right, a clean entry. What I would do is you have to look at, because there's no inefficiencies or anything, right? So you have two options. You can use the original wick, because as we say, if we're going to create wicks like this and make an attempt to trade below them, those become areas of interest. But conversely, you can use it in the opposite direction, right? So if we were going to close back above this wick's midpoint, you could trust that that gets used as support, and we actually don't even get in there. So if that was the case, you would miss that. The other opportunity would be to use reclaimed fair value gaps, right? So as we trade into the rejection block the first time, when we move away from it, we had created a fair value gap here. So we create this fair value gap, it holds us heading into 930, and then within this ugly consolidation, you could see that it still was holding us nicely. All right, so when we close below it for the first time here, you would expect that this becomes an inversion and should hold price bearish. So when price then trades back up into it, closes above its midpoint, you can trust now that its midpoint should hold, and in reality, this should become a reclaimed fair value gap. Once again, you're not getting true confirmation because it's not closing above. Right, the first time it closes above is here, and it then doesn't even return. But these are just how you can use, right, aggressive entries. So as we close above our midpoint, if the expectation is we've already done all the damage to clear out sell side, and now we have all this buy side to target, you can use the midpoint with stop below the most recent swing point to then target those, right, relative equal highs and the higher time frame daily fair value gap. That ends up holding, it runs higher. Say that you didn't really get anything within this whole leg, right, and you're waiting for an inefficiency, where you really get the first one here. So we do create a little bullish fair value gap. Notice this candle never creates any wick to the downside, so now we're going to have a wickless candle, right? We can expect that inefficiency to be traded into after we run out some buy side. So ultimately, we do run into that high. We trade up into the daily fair value gap. We kind of get stopped in our tracks. But as we said, if the expectation is continued bullish delivery, this is a bullish breaker as well. So it's very ugly, like, because the candlesticks aren't delivering as clean as you would like, but you can still see the underlying structure. So this is our low, right? Our highest high down to our lowest low. As we displace above this high, closing above it with this candle, right? We're leaving an inefficiency and creating the bullish breaker. The bullish breaker becomes the highest up close candle within all of this jumbled mess, right? So if that's the case, you want to look for the highest up close consecutive candles. It becomes these two. So this now is our bullish breaker. You see how we have the inefficiency paired with it here and here. And now for a low barrier of entry, right, you would just use the breaker high, especially because it's the 1 minute fair value gap. Stop below the breaker, also below the down close candle. And then from here, if our expectation is bullishness, right, you can target just expansion moves into like a daily swing point or the daily midpoint, excuse me. Or of course, if you're kind of like just holding this as we create swing points and to run through those swing points, you could run down equity there, right? So you can be partialing along the way as we trade into an area like this. For this daily fair value gap, because it was so large, we actually had our quarter levels as well, right? It gave us added clarification, so we could do that. So we had it like this, right? And then when we do this, it gives you even better targets, right? Because you could aim for now that quarter level, midpoint, upper quadrant. So a few different areas that you can target. But ultimately, once we do create this breaker setup, right, we're allowed to now remain bullish. And this was a setup that we actually had missed in real time. Right, we said how this buy side was our kind of line in the sand. So if we can hold that, retrace into the discount, close above, we would expect that to hold. Well, that pretty much happens exactly, right? We trade back down into the discount, we make a few more attempts, and then we displace right above that old high. As we're doing that, we're leaving a bullish fair value gap. So a textbook entry point there. We got a little bit greedy. I wanted to use the original buy side. So right, my entry was like this. Unfortunately, it just uses the actual 1 minute. So that would be like the low hanging entry, right, as we say, to just target midpoint. We got a little greedy, ended up missing it. That's fine. As long as it continues as we expect, that's really all that matters, right? That's what we're looking for. So within here, gives you another entry. We get above fair value gap. We then start moving higher and higher, right? We create that discount inefficiency. After hitting midpoint, we retrace into that discount. We then get back above this fair value gap. Right, from here, this is our, I kind of want to move this overlap to fair value gap real quick. Because we understand, right, the 4 hours within that, but really we're looking at the daily itself. So once we hit our first quarter level, we make an attempt to get up into the midpoint, falling short, creating a little 3 drives on the way up. Here we just run out a short-term low. So even in the bullish delivery, right, we're still going to have to pick up some form of liquidity. And that's what we're getting here. Especially because we're heading into lunch. Right? So as we're kind of getting later on in the morning, that's when we can expect the retracements on liquidity before the continued expansion. So at this point, we're not looking for anything in here to be re-delivered into because this is all balanced, right? Once again, the paintbrush analogy, we've gone up, down, up, down. Everything in here has already been efficiently balanced. So once we do finally leave it, right, there's no need to even really test that at all. That is why when we clear this short-term low, we can then immediately start looking for the reversal and then trust that entry. Right, so the first one would simply be, as we often say, last fair value gap. As we invert that, that becomes an area for entry. We invert that, we get above midpoint. I like midpoint of the daily fair value gap. That's going to be a strong area of support. So right, as we clear our short-term low, we're then displacing back above midpoint, which is also paired with the original. So now we're reclaiming a bullish fair value gap while creating a new one aligned with midpoint of the daily. So areas like this, we really expect should hold price, right? We see that nicely. That would be an opportunity. If you want to be safe, you can go below the swing low. As we said, if we understand that this fair value gap really should hold, you can go below the candle that creates that. And then once again, just aiming for right midpoint of the daily fair value gap. So aiming for those quadrant levels, because once we traded into this on lower time frames, there was really nothing to aim for, right? As we said, this whole daily fair value gap was pretty much an inefficiency. So it's pretty hard to target anything. And instead, we were relying on just the key levels within that. And you can actually see how nicely those played out. Right, we trade up into the lower quadrant first. We retrace short-term low. We then trade up into its midpoint. We give some consolidation. We then trade up into, right, its upper quarter. Drag it out a little bit. So you can see here, and it's giving you opportunities at its midpoint. That's where the best setups are going to form, right? When they're linked with the fair value gap's key levels. So first the quadrant level here. As we said, we then have midpoint. These should be the same level. I just have them messed up a little bit, barely so. Right, this is going to be the same level in price, but we understand we're anchoring this order block to that midpoint, and we're displacing above highs with the fair value gap. So when you have these key levels, that's when you can start keying up on which 1 minute PD arrays are important. Right, especially because, as we said, we create a wick originally, we displace through that. The wick is going to act as a gap itself. That midpoint is midpoint of the actual daily, and we have a 1 minute. Right, so everything in here is pretty much telling us that this is where price will hold. Midpoint, easy entry, below swing low. And let's say that you wanted confirmation, as we spoke of. Well, this gives you that as well. Right, so you already think that this should hold, but you don't trust entering right away. Well, what would you wait for? You can wait for a short-term low to be cleared within that. Right, so we create a short-term low, we run that short-term low, hitting the OB. Notice how we had created a bearish volume imbalance aligned with the original wick and the 1 minute fair value gap here as well. Right, so I'm just going to actually label the fair value gap. So the volume imbalance is paired with that fair value gap. So if our expectation is bullishness, if we invert that, you could already trust that the inversion volume imbalance should hold. But now we actually have a fair value gap there as well. So that becomes a confirmation entry, right? We trade into the low of it. We close back above the volume imbalance and the fair value gap. That becomes entry. And now you have a new swing low that becomes protected. And that's one reason why confirmation entries like this can actually give you a little bit better risk to reward, because it will create new swing points that should be protected, right? Whereas like if I was going to enter this blindly, I feel like my stop would have to be below this swing low. But now that this low gets put in place and we close above, now you're able to have a little bit tighter stops and still kind of target right that same objective. So from here, from midpoint, as we say, we trade up into its upper quadrant. I mean, beautiful delivery, right? Wicking into it once. Again, from here, where do we go? Right back into midpoint. So even though, right, you would say it's choppy, consolidating, it's still utilizing these very specific areas in price. And when you can find where these areas are going to be presented, that's when you could find a lot of setups. So even in here, you could have another confirmation entry. We wick through, picking up a short-term low. As we close back above, you can simply reuse that. Right, PD arrays can be used more than once, especially in choppy markets. So once again, that one tests it a few more times, but ultimately we hold that as our protected low and we run out buy side again. And at this point, right, this is during power hour. So power hour ends up running out that high and then simply just returning back into that fair value gap. So this became our new high of day. Now on Thursday, right, just as we continue to say, we close below high of day. Thursday opens immediately. We already run previous day's high. So once again, previous day high has been cleared before the 9:30 opening. So at this point, right, we're just choppy, consolidating. We create some relative equal highs. As we head into 9:30, we actually run out those highs and create a new swing point here. Our expectation, however, was our continued bullish delivery, right? We just expect bullishness. So any swing point that gets created like this, we expect to be traded through eventually. And any move lower is simply to target opposing liquidity or to return into a higher time frame inefficiency, right? And this was doing both. So here on Thursday, right, we create that swing point. We run lower to pick up all of these relative equal lows that we had created. And we're also returning into our higher time frame daily fair value gap. We said that this was actually a very clean setup. We had news at 10, so we were waiting. We still were able to catch longs. But if you were trading earlier, right, this would have been really an A+ setup to where we had created this short-term low. We had already cleared liquidity. So we've cleared some, right, major form of liquidity. We can really do this low. Lock in, there it is. So we've cleared major liquidity. We've then put in a new low and we've cleared that low, right? And this low, notice where it hits perfectly on the midnight level. So if our expectation is we want to remain bullish, midnight should hold us. We're clearing a short-term low. We're hitting the midnight level. We're then holding the daily fair value gap and we're displacing above, creating a fair value gap here. That is also our first presented fair value gap of the day. So that honestly was a textbook long, right? Everything that you would want to see really comes together. Higher time frame area of interest, lower time frame swing points, liquidity being cleared, displacement, creating a fair value gap. That's also the first presented. From there, right, textbook to target the buy side. So textbook entry there. It wicks into it aggressively, right? Bodies get nowhere near. That's what we like to see. The bodies hovering above that inefficiency. And from there, just a bullish delivery. At this point, we said, because we had news at 10, right? So that's this candle here. We said that if the news candle was to wick this high, break lower, we would actually look for a retracement. If it just displaced through this buy side, leaving an inefficiency, we would expect the bullish continuation into this fair value gap now. What ended up happening was, right, displacement leaving the higher time frame. This was a 5-minute fair value gap. So it displaces, it leaves this inefficiency, it creates a 5-minute fair value gap. And for us, that was simply our entry. Right, so the very first entry we took was here. So as we create that institutional order flow entry, right, using that, we're not expecting the fair value gap to be traded below on the original touch, so we can have a tighter stop. And then I just aimed for 5 handles, so we actually got out at the high of this. Right, and that was one that you guys saw as well. So we had that fair value gap, we traded up, we end up high ticking that, we get out. From here, we just continue to consolidate. We still trusted that this 5-minute, however, would hold price, especially after, right, so let's go back to kind of real time. So after we get out of this entry, we notice that we fall short of our higher time frame objective. That becomes our new area of interest. We get a slight retracement, bounce. We try to get below the 5-minute, but we notice it's all just a wick. Right, so when we create this low here, this became our new protected swing low because it's trading below the original buy side pool. It's filling in the 1-minute fair value gap fully, and now it's still holding the original 5-minute with the bodies. So when we saw this low get put in place, and then another failure swing to reach into that liquidity, or excuse me, that inefficiency, that's why we were okay to then trust that the 5-minute will hold. right? So you guys saw that the very next time price traded into this, we use that as entry, especially because notice on a 1 minute time frame, as we're leaving the 5 minute, we have created a 1 minute bullish fair value gap. So we were utilizing both of those. As you said, stop loss was below this low because this is the swing point below the original liquidity. So if we're going to do that and we don't actually want to get back inside this range, right, that low will be safe. And you can see it here. We get real close to it, but we're trusting structure. And that's why we're not thrown out or taken out, right? We instead tap that buy side perfectly, beautiful delivery. From there, we then get back above. What we were looking at here in real time was this liquidity void, right? Remember? We said that this was our flip point. So as soon as we get above it, we tried to enter here. Actually, we ended up missing that. It was just too quick, but same idea, right? As soon as we get above it here, we should not get back below it. And that becomes our line in the sand. So ultimately we trade higher. We leave the 5 minute again, this time leaving a volume imbalance in its wake. When we leave that, we then put our stop right under the 5 minute because now we understand we've traded through the low once, twice, 3, 4, 5 times. If we're truly going to start moving away, especially as we're heading into lunch, we're not going to test that 5 minute low again. So we were able to move our stop right below that. Instead, we use the volume imbalance as our area of support. And then ultimately, we do get the release into buy side. So that was nice. From there, we just continued to deliver higher, right? As we said, this now was midpoint of the daily. So once again, using these kind of algorithmic reference points, if I was to bring up the quarter level, you actually see we probably stopped there first as well. So if I go like this, yep. So once again, we trade up into that lower quarter, consolidate, slight retracement, but then ultimately we hit our midpoint. And from there, we actually start breaking down bearish. So at this point, we've already delivered into, right, this is a daily fair value gap. So we can expect at least a short-term retracement, even if we want to see higher prices. Like as we say, next week, our expectation is we run out these highs. But to close out the week on Friday, we can expect a retracement into that range, especially because that weekly candlestick was so aggressively bullish. So for us, at this point, we hit midpoint of the daily fair value gap. It's Friday, right? You can expect a retracement back into the range. And then from here, it just gives you a few opportunities. So you can look for like the breaker. Right, so you look at the high, down to the equal lows, to the highest high that hits midpoint. So as we close below that, right, then the breaker holds. Breaker would be the last down close candles. So in theory, it would be this whole price like this, right? You could just drag that out. Once we close below it here, the breaker would be our kind of trusted area to hold price. Within the breaker, what do we have? Well, you can see that its midpoint actually has a fair value gap nestled with it. So once again, that's how we can use kind of, right, the higher time frame and other PD arrays to help us figure out which fair value gaps are important. So now we understand that this fair value gap really is what should hold us because it's the midpoint of our breaker. We trade up into it, holding with the candle bodies beautifully. We then break lower. Notice that we're closing underneath the daily fair value gap. So seeing something like that indicates to us that it can make another move actually lower and that it wants to maintain its bearishness, especially understanding kind of the market profile, right? Friday, extremely bullish week so far. So a retracement into the range could be expected. As you said, from here, we just retrace back into an inversion. So we have an inversion. It's also a little 1 minute bearish fair value gap. Trade up into it. We then break away again, falling just short of the swing point. But then eventually, right, we create relative equal lows. And then what do? We displace through this low. So now at this point, this becomes a good area for shorts, right? Because this would really be like the second stage of distribution. The breaker gets created. It holds the breaker. It puts in a new swing point, right? It fails to run out that swing point, and then it displaces through that low, leaving the daily fair value gap as well. So when we see that, right, leaving that fair value gap aligned with that liquidity, that becomes a very strong area for resistance. And as we said, you could either do it right away. So at this point, you would trust this and you wouldn't really need to wait for confirmation because it's already confirmed bearish. Right, stop below a swing high or above, excuse me. And then for us, you could just target the original buy side. So kind of this consolidation, right? The low within that consolidation would become the objective, like that. Because it's returning into the original buy side pull, and there's a swing low there, so that's going to act like a magnet. Right? So that's a clean opportunity. Once again, though, say you didn't necessarily trust it and you want to wait for confirmation, well, that gives you it here still, right? It creates a short-term high, it then trades into the high of the fair value gap, creates a bearish volume imbalance, and immediately breaks lower, breaking structure again, right? Closing below. So at this point, you could use either like a volume imbalance in here, understanding that this will be the protected high, or you could just reuse that fair value gap. Because as we said, in kind of these short-term consolidations, price can reference the original inefficiency more than once. So a few different areas that you could look for before ultimately you get the aggressive sell-off, simply trading into, as we said, the relative equal lows here, coming all the way back down into our first presented, and really just clearing all of the sell side that we had created. Right, so we created high of day. This like here is just to clear all of that out. So we're clearing all of the sell side, creating a new low of day, and returning into our daily fair value gaps midpoint. From here now, I actually took a long that we shared, right? Because the expectation, as we said, my expectation is continued bullishness. So when I see this huge down movement like this, my expectation is once we put in low of day, I want to see pretty much either a breaker or just a simple reversal signature to enter on. So my entry was on this new day opening gap, right? And why was that? Well, as you said, the expectation is higher prices. This movement lower is simply a sell to buy model. So I'm wanting to see a short-term low be cleared. We get that here. It's paired with daily fair value gaps consequent encroachment. That's important. Higher time frame key area. So now as we create the short-term low, for me to really confirm this, I want to see this high be broken. And that'll create this as our bullish breaker and this as our protected low. Right, so that we get that here. Price closes above. Not only is it closing above the swing point, but now notice how right that new day opening gap is nestled pretty much with the breaker high. So this is going to be the high of our breaker. The new day opening gap is paired with that, and there's a fair value gap here and here. Right, so two areas of interest as well. Oh, did not open that. So you have to allow, right, if we expect that the breaker is going to hold, you have to allow for this fair value gap to get traded into. I wanted kind of the low barrier for entry, so I just used the new day opening gap itself, which is paired with the breaker high. But for us, we understand that this low here becomes the protected low, so a stop has to be below that. Price comes down into the fair value gap. That's perfectly valid to enter as well. But for me, right, I'm not going to give up a few handles because price could have easily held from this new day opening gap and ran. So I'm fine giving up, right, that extra 2 handles to be in the trade than to try to catch that swing low exactly. So instead, we get in on that new day opening gap, and then we were just targeting the high of now our opening range. Right, that was paired with the high of the daily fair value gap. And then there was also a little, there was a tiny inefficiency here, very small. But right, that was enough for me to kind of be okay with targeting the high. Because if we're going to hit the high, we have an inefficiency. So once we get entered here, as we say, we go into the actual fair value gap here. We immediately get back above new day opening gap. Slight hesitation at an opposing premium. That's also previous day's high. Ultimately, we get above that. We give a slight retracement, and then we end up running into the high. From here, we do actually get kind of that market on close, right? So the last half hour of the day, extremely bullish. Sure, it would have been nice to hold for this, but we were content with what we had. Right, there was actually a few opportunities. So from where we entered, as we say, we use new day opening gap. Price then breaks higher. Well, what is this? Low, high, lower, low, broken. So now we have a breaker that can be used. Right, price trades back down into the breaker. It then displaces away from the breaker with a fair value gap. Now that can be used. Right, notice that it's also getting above midnight. So now midnight as well could be used. Right, and this whole leg up, really any discount could have been used at this point. So now as we're heading into 350, we've gotten above our new day opening gap, or excuse me, our first presented fair value gap. We often say that 350 will kind of seek opposing liquidity. So in real time, we create this low, 350 opens, it makes a quick move to pick up the short-term low, and then from there, it accelerates. This would have been another area for entry, right? Because now 350 is like the Judas swing, so it runs out a short-term low here. It gets back above the first presented, closing above the OB. You can use the open of that, right? That's why you see price hold that level. So it holds that, and then from there, it just runs and clears out all the buy side and returns into that last open inefficiency, right? So kind of really repricing this whole leg lower, because you notice from this high to low, this was the only inefficiency left. Like all of this was balanced. We displace, we never come back into that, and instead it's used for the pump up to close out the day. Once we do that, we just retrace into the bullish fair value gap, where we end up face line out the rest of the day. So honestly, this was a pretty clean longing setup here at the end of the day, which is why I like that. Right, really everything we wanted to see. Clearing low of day, holding from a higher time frame area of interest, getting back inside the opening range, creating the breaker that is paired with the new day opening gap. So everything in here was, yeah, as we said, a go for longs. And it really gave a few opportunities. That's as we said, you could have entered here, you could have stacked here, stack again here. You could have then used even first presented all the way up. But yeah, after that, boom, we are current. So what can the expectation be? Well, right, as we've really gone through, bullishness is still expected, especially seeing something like this, right? Let me go to like the daily. So on the daily, geez, all this nonsense now, hold up. We might have to clear, let's go like this. Got so much writings in here. I'm gonna clear pretty much everything in between. Clear all this. Like this. There we go. Don't need that. Shouldn't really come back down here for the time being. Okay. So for me, yeah. Right, same idea. So we had this daily fair value gap. As we displace into it, notice how this 4 hour is perfectly aligned. The expectation would be if we close above like we did here, we would see a retracement into that fair value gap. It should hold and push us for a swing high. Well, so far, it's pretty much taken place. Right, so we wick into that. We hold the daily's consequent encroachment, and notice how the bodies are hovering away from that, not even making an attempt. So for me, my expectation would be this daily fair value gap, hold price for another leg into buy side. Right, that's what we'll be looking for. Yeah, especially because the 4 hours held so nicely here. Yeah, I like that. Original liquidity, first presented, kind of linked with the daily fair value gap. Yeah, so in reality, this is kind of where I'd see, right, original liquidity, cleared, displaced above. This is what I would want to be kind of the line in the sand. So I wouldn't want to see price really close below that if we're going to stay bullish. Right, notice how that 15-minute is paired perfectly with the daily fair value gap. So I like that. My expectation would be we trade down into this. Some type of long setup, could be really anything, but right, something that gives us a confirmation to then start looking for higher prices. And then I'd like to see this cleared, and then ultimately, let's go to the daily real quick. Ultimately, all-time highs. Right, so this is the full objective. Let's go to 15 for it. Objective. Cool. Yeah, that is it, fellas. That was last week's action. And next week's kind of outlook, right? I'd like to see move lower first into the daily fair value gap, find support from there, and then just continue to deliver into some buy side. But yeah, we'll leave you guys with that, as long as there's no questions or anything. I'm about to hit. Oh, I see you typing, Mike. One sec. Oh yeah, we could do that. Forgot. Yeah, no problem. I forgot. I do like doing this, honestly. Just helps you stay so much more in sync with what we expect. As far as NQ, really like everything we talked about in ES, we can almost mirror an NQ as far as delivery, right? Higher time frame wise. We are a little bit higher, so let's go to a daily real quick. Did we get, okay, we're not all-time highs yet. So for me, still same idea. But let's kind of look at higher time frame expectation, right? We opened the week below, straight bullish delivery. With NQ, I could actually see a little bit deeper retracement, so just into the daily. Like I could see us, right, coming down into this, especially because as we invert this, bullish fair value gap there as well. So if we start moving lower, this is what I would expect to hold price. But because we're so close to that buy side, I wouldn't be surprised if price gapped over that, to be honest. Like when we open here later today, kind of watch that. But honestly, a gap above is kind of what my expectation would be. If we don't gap above and we can kind of stay within here to open, to be honest, I would want us to keep this low intact as well. So I would like to see that low, pretty much the same idea as we saw in ES, right? We purge that sell side, we revert, we have an inversion. And then as we create the inversion, we're creating a bullish fair value gap as well on a 15. So for me in NQ, if we're going to trade into this, I would like to see this hold us to create another run as well to target highs here and then ultimately up here. So same idea. We closed right on that swing point too. That's hilarious. Look at that. Quite literally perfect closure on that daily swing. Very random. But yeah, so for me, I would expect bullishness. I wouldn't be surprised if we gapped above that, to be honest. If we don't gap above it, then as we said, I would want to see pretty much this area in price hold. Under that, as we said, then maybe we're going to have to start coming for first presented. In reality, on a higher time frame, NQ could really fall all the way into this and still find support. Ideally, we wouldn't do that, but honestly, say we gapped above this high, then that's kind of when I would expect for price to try to return into the daily fair value gap. So yeah, a few things to look for heading into next week. Higher prices is the expectation, however, on both. So we'll keep working with that kind of understanding or expectation. As far as when, let me just check high impact news real quick. Okay, so yeah, we have nothing on Monday, but we'll come back on Monday morning just to see how the week starts, right? So we'll be back here tomorrow, 9:25 Eastern. So just before the opening bell. Oh, my fault. Yep. Is that gold? XAU. That's gold, right? Silver. I never seen that. Wait, what? Ah, there it is. Okay. Gold. Let's see what we got on gold. Let's go daily. A little more tricky. Okay, daily. One, two, three. Cleared one, closed below. Okay, actually gold for me, a little more bearish actually. We have 3 drives. Yeah, I would look for actually gold to clear this low. Potentially retest this inefficiency. Yeah, I wouldn't mind that actually. Right, because notice, yeah, look at that. So this inefficiency is paired perfectly with a weekly first presented, or that's a monthly first presented. So I wouldn't mind that. Right, we saw 3 drives, so we have 3 drives on a higher time frame. We've cleared the first low, closing below it. So I would expect at least this, and then from there, a potential bounce. Because we do have relative equal highs in here. But we've cleared more buy side for the time being. So yeah, I'd actually look for a retracement off of like here. So if we came up into this, right, we create the low, we retrace it, we displace through the low with a fair value gap. So this would be where I would expect resistance to be met in, yeah, gold. You don't trade it, but everyone's asking. That's funny. Yeah, we could take a look at that more often, maybe. I don't trade it either, but still moves nice. So yeah, for me, honestly, I would expect lower prices here in gold. Just for the short term, right? Like higher time frame objective, I think it would be like we would wick and then try to run these highs out. But in the lower time frame, I'd want to see us actually clear that low out. This low. So yeah, lower prices in the short term. But all right. I think that should be good. No problem, brother. We'll go ahead and wrap her up for today. Appreciate y'all hanging out. And then, oh yeah, go ahead. What about the higher, smaller daily? What do you mean by that? Oh, here. I see what you mean. Get that, bro. I mean, yeah, I can see that. Let's see. Because that's the 4 hour as well. Oh, wait, on ES, right? When we were looking at it. Honestly, I would not, like, as I look at this, I almost feel like if we were going to attack this low, we'd probably come through this daily. Especially with how we've created this wick, right? Because we often see, like, if we're going to create a wick like this and then actually trade through that wick, more than likely we're going to make a little deeper retracement. It'll kind of depend on how we close, so we may have to watch that in real time, but ideally, if we were going to run for highs, I wouldn't want to see that low violated. If we did, of course, then we'd have to reassess, but I would almost expect that, like, if we close below this low, that we'd actually fall through this small daily and make an attempt to run into like a first presented here or even lower into the higher time frame, as we said, the overlapping ones. So ideally we just hold this low. If we end up wicking that, that'll be a different story, because like we could do that in theory, like wick this, so wick into the daily fair value gap and still move. So we'll just have to watch that, but I really wouldn't want to see this low be violated before these highs. But yeah, there's that. More relevant at this time, yeah. Yeah, I would want this to just be the protected low for the time being. Purge, revert, if anything, come back into this liquidity, hold there, and then run. Cool. So yeah, if that is all, we'll make sure we can wrap it up. But yeah, it was good. Good little recap. Which definitely leads me to expect higher prices overall. We'll be interested to see how we open though, for sure. If we gap lower, I'd be even more inclined to start looking for longs right away on Monday. Because now people are going to see this as like a dang, right, retail top or whatever they call it. Double top, triple tops, area of resistance. But all right, tomorrow at, might be like 9:20, 9:25 we'll plan. Oh, no problem, Cal. I didn't think you were actually here. Nice. All right, fellas. Have a good rest of your weekend. Enjoy it. And we will talk tomorrow morning. See you guys around. I'll have the video uploaded here for you in a few hours as well, so check for that. But yeah, until then, take care, everybody, and we'll talk tomorrow morning.